Very excited to welcome back Andy Schectman to the show as the nation spirals deeper and deeper into chaos, as unfortunate as that sounds. Welcome back, Andy.
Elliot, good to see you, brother. It is unfortunate, also reality. It's interesting when you think about the wheels that are spinning and how they seem to be more wheels spinning faster and more frequently. I've been doing this for 33 years, and this is not the world I remember when I started this company in 1989, before the internet, before email. Good to be here, though, Elliot.
It is interesting because we've had these shows, we've covered what's going on. Nothing seems to be surprising to you, though, even though it is surprising to a lot of people, which is unfortunate because people don't seem to be informed. But this is all just happening in slow motion. Are you surprised by this headline? Are widespread layoffs coming? How the pandemic has changed employers' recession strategy, but there's also a fear of recession. Bonds are signaling recession because of the yield curve inverting. The entire economy is imploding. You're not surprised by that, but this is breaking news. So what is your take?
Yeah, you're seeing guys like Jeff Bezos, like Jamie Dimon, like Elon Musk, Mark Zuckerberg, Warren Buffett. They're all saying the same thing, that a storm is coming and maybe it's a hurricane out our back door. Look, I think things are different this time. Never in history have the markets been so overvalued. And I think that this time things are going to be a little bit more difficult because the valuation of those markets were all spurred on by the opposite of a rising interest rate, contracting credit environment. And if you pull the plug on the credit, you raise rates in that environment, you, I think, are going to witness a massive drop in the markets that have benefited the most from that environment, that easy money environment. So yeah, I think it's time to get a little bit nervous.
Yeah, and it's just really unfortunate as baby boomer generation trying to retire. Now is the time that everyone needs to start getting nervous. It's a really unfortunate timing from that perspective.
Well, it is. It's important to note too that contracting credit almost always precipitates a crisis. And I think we're moving towards that human desire, Elliot, to protect what we have. This is the fear instead of the desire to make money or easy money or greed. And I think that's what we're going to see. We're going to see a shift because look, the credit expansion that we've seen has been aimed at supporting the markets. It inflated the financial asset values. So while the central banks have been suppressing interest rates, the major banks have created the credit for the buyers of the assets to, be part of the most dramatic, widespread, longest lasting investment bubbles in financial history. And I just want people to understand that now that rates are rising, this bubble environment arguably is over. It will be replaced with maybe a bear market in an environment where he or she who loses least wins. And I also want to say that the smart money is leaving the stage. And I think it's the public that faces the unwinding of the bubble, the combination of the rising rates and the contracting bank credit. I'm gonna say something, and this is not meant to be braggadocious. In fact, the woman who did this order with me wants the world to know that big money is buying metal. She placed a $50 million order with us last week. That's 5.5 times the biggest order I've ever done in $7 billion in transactions. We did $600 million in sales last year. We don't do anything close to a $50 million order. This industry's never seen, I don't know of anyone who's ever done a $50 million order. She sent us a wire without even as much of receiving an invoice or an email confirming it. I sent you a $50 million wire was basically what she said after asking for our wire instructions. This is getting real. When I say big money is leaving traditional assets, that is exactly what is happening. And they will be the ones to have exited the chaos long before the public catches on to it. And that's the way big money always operates. They're closer to the information, and let's be honest. If you have that kind of money, you're not a dummy. You have worked hard, and you're smart enough to have amassed a massive fortune. And I think that's important here to realize that the big money is starting to realize that the Fed is trapped and that a recession is on the way. and hopefully not worse than that, hopefully not a depression. But I just want people to remember, I've had a constant theme with you of gold and silver being wealth. He or she who loses least in the coming ensuing environment wins. And that's really what I want people to think about as they think about accumulating gold and silver.
Absolutely. I love following the smart money, and that is a massive purchase. But here is what most people are reading about and learning at this time based on what's coming out of the mainstream news outlets. The dollar's prime international status remains unchallenged, according to a study by Federal Reserve Bank of New York staff, despite challenges from sources including geopolitics and technologies like digital currencies. What is your answer to the dollar being the most clean shirt in the dirty laundry pile argument?
It is. I mean, it has been, I guess, arguably. It's a fiat currency, and it is the prettiest mare in the slaughterhouse. I think that this report coming from a bunch of liars, who in 2008 told us that the subprime crisis was contained, who told us all along that inflation was transitory and then it was structural. They're telling us that they're going to start to sell off their balance sheet when it's basically still increasing. They've told us that that the economy was as strong as ever. We're not heading towards a recession, and just basically reversed course and said we are in a recession. And now you're seeing talks of layoffs across the board, and precipitated even worse recession. So look, I think that the dollar is the king of the hill until it's not. And I think the world for many years wasn't looking at replacing the dollar hegemony. They are now. And especially with the weaponizing of it, we have incentivized those countries to expedite their departure from the dollar hegemony by pushing Russia out of SWIFT, by freezing their assets as the world reserve currency across the line. And you can see this by their admission of trying to create a new world reserve currency. And when we contrast it to the pieces behind the scene, the Belt Road Initiative, connecting 75% of human population, the new passage from Iran to India, safe passage by Russia, all these countries part of the Belt Road Initiative, all of these trade routes, all of these trade agreements, all of these unilateral agreements are striking, I think, real fear in the heart of the Federal Reserve, who's lying to us again, saying that the dollar is the best currency in the world. Yeah, maybe it is right at the moment because they haven't issued their new BRICS currency. But again, my feeling is that when you realize that $12 billion has already been done on the new digital yuan transactions, that the BRICS nations will use that technology, they'll piggyback on top of it, they'll issue a new currency, and they'll peg it to commodities, and in particular gold, because of its tier one status. And real quickly, that changes. So, and I think it will be one of these deals, as I've said on your show too, that there'll be no slow bleed. This will happen on a Sunday night when no one has time to react. And I think that we have incentivized this behavior by the BRICS, by weaponizing the dollar, and the pieces are put into place for them to challenge the dollar. And as Zoltan Pozsar says, a new Bretton Woods 3 system where currencies are moving towards commodity backing. Well, there's your gold tier one status. There is your central bank digital currency that's already done 12 billion in sales in transactions. That works. You see the coalescing of all of the BRICS nations, the largest accumulators and producers of gold in the world. It's just a perfect fit. And now you throw OPEC into this, where you have OPEC being protected, Nigeria and Russia or Nigeria and Saudi Arabia by Russia and China. The pieces are put into place for this exact thing that we've been talking about to happen. So when I see the Fed come out and spew more crap, like all they do is lie, it only makes me a little bit more convinced that we are getting closer to that point where, in fact, Fed Chairman Powell came out a few months ago and said, hey, there's enough room for more than one world reserve currency. He's acquiescing to this reality already. So no, I think it's nothing more than lying and jawboning that, and they have yet to speak a word of truth in quite some time.
Yeah, and if you had just listened to the Federal Reserve, you'd be in a world of hurt right now. But if you had listened to you would have foreseen the inflation, you would have foreseen the crashing economy that's happening, and you would have foreseen potentially this geopolitical maneuvering that's going on and will manifest itself like what you're talking about. And so I guess the end game here, do you think the Fed pivots and loses credibility once there's too much pain in the market? And how do you see this all play out?
You can more or less take away that the market believes that by rallying the way that it did after getting this news of recession. The market believes that they will pivot and that they will lower rates again and go right back to where they were. If they do that, they've lost all credibility. If they do that, they've just, by their actions, admitted that they're trapped. It's either death by depression or death by hyperinflation or hyperstagflation in this case. And I think that if they pivot, it's game over. So I know the smart money believes they will, and perhaps they will. They always have. Every government has chosen inflation over austerity when the chips are down. But, you know, it's really difficult to do that when you're coming from such a low level. I mean, if they're going to do that, I think they need to raise things by 100 basis points minimum on the next meeting to give them a little bit of latitude. We talk about a Fed that is supposedly getting tough on inflation, but they're really not getting tough on inflation. And I think it's important, just to talk about something that we talked about last week for people to understand exactly what I mean by that. You have the National Bureau of Economic Research study who said that our rate of 9.1, if calculated the way that it was in 1980, would be 13.6%. And by raising interest rates by only 75 basis points to 1.5% in face of 9% inflation, that's really north of 13, is not getting tough on inflation, not selling off their balance sheet. In fact, accumulating more is not getting tough on inflation. And so you think about it, how much room do they have to really get tough on inflation before everything collapses? If we're already talking recession, if we've already seen the housing market slow down, if we've already seen a doubling in mortgage rates with rates only up to 1.5%. Remember, Paul Volcker raised the federal funds rate to 19.75%. We're only at 1.5%. That's getting tough. And so if a combination of not getting tough, jawboning, and then pivoting ends all credibility of the Federal Reserve. So I would like to think they're smarter than that. And, the bottom line is this, that if you're addicted to heroin, there's only one way to get off of it. And that's to rip off the patch and just go cold turkey and suffer the shock and awe of it. The pain is real. And if you don't go through that pain, that cleansing, then you're just going to make the final outcome that much worse. And you can look at the Federal Reserve as a prime example of that. In 2008, they should have just let everything blow up. Their balance sheet was $800 billion in 2008. And they papered over the problem to the point where their balance sheet's north of $9 trillion right now. And so, they're the ones that have created this mess. And when you have another way of saying a $9.1 trillion balance sheet is that balance sheet was used to buy mortgage-backed securities and U.S. Treasuries, both of which supported the mortgage housing market and kept interest rates low, which created the wealth effect. And this is what I was talking about. By removing the stimulus, by letting rates rise, the downward pressure is every bit as strong as the upward pressure was in the environment when you had low rates and easy money. Well, if they pivot, which the smart money says they will, it's over for their credibility. No one will ever trust them again, and rightfully so, as they have been nothing but wrong and disingenuous and lying about the state of affairs and of the direction that they intend to head. So, yeah, I don't know, but I will tell you the smart money and even the market believes that is exactly what will happen. Maybe one more increase in rates followed by real jitters, convulsions in the market, pulling the needle away from the addict, and then going right back, putting the needle right back into the vein and saying, okay, fine, have another hit. So, yeah, I guess we'll have to see, Elliot, but Smart money says yes.
Exactly. And we're moving towards the end game here for the Fed's credibility. Gold is a hedge against the Fed's credibility and their ability to manipulate. So,
I just want to real quick talk about the fact that the price of gold and silver have gotten hammered lately. Remember, he or she who loses least wins in this environment. Everything has been coming down. If you look at it from year over year, gold is up just a few percent and everything else has gotten clobbered 15 to 40%. So it is doing what it is supposed to do. Maybe it's down a little bit now after the last drop, but it's doing what it's supposed to do. Now, some people would say, well, why isn't it going much higher? And that has to do with central bank manipulation, commercial bank manipulation. There are a lot of reasons why it isn't going higher, none of which really have anything to do with supply and demand. But keep in mind that in a world where you look at the distortions created by the easy money and those low interest rates, they all center into financial assets. Precious metals are the least affected by that environment, at least haven't been. They are the ones that are the most undervalued assets on the planet. And so this correction to me is a subsidy when it's all said and done and people start to realize that financial assets are going to tank in the light of rising rates. Then I think you'll see an awakening. And even if it goes the other way and they lower rates and reaccommodate and the markets go to the moon, now you're talking hyperinflation. So, and I think at some point the market realizes this. Do not be discouraged by the pullback in the metals prices. This is something that we see over and over and over again. And they always like to tell us, well, it's money throwing out the baby with the bathwater. It's selling very liquid assets to pay off debt or margin debt or whatnot when markets are unraveling, and then usually goes right back up. So anyways, if people want to get in touch with us, our new website will be done in August. In the meantime, all they need to do is send us an email at info@milesfranklin, mention the early stage investor. We'll send you an updated inventory list. We'll answer any questions that you have. We'll put you in contact with myself, one of the brokers that I've personally trained, all of which go back to elementary school or high school with me. These are my oldest family and friends in the world. We will take great care of your listeners, make sure they get the best price, answer their questions. Yes, it's not as convenient as clicking a mouse button on the online store, and we'll be there soon, but we'll make it worth your while. We've never had a customer complaint ever. We're licensed, we're bonded. We'll make it a safe transaction. We'll answer your questions, make sure you get the best price, and make it something that you don't regret doing. That's for darn sure.
this discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.